Hey everyone, welcome back. Ready for another deep dive?
Definitely.
So it's this English learning podcast called Daily Money Briefing.
Huh. Interesting. Okay.
It's actually pretty cool. You get the
Yeah.
financial news and kind of a language lesson all in one.
Oh, I like that. Sort of killing two birds with one stone.
Exactly.
Today, we're digging into some really interesting material. It covers quite a range, think record government revenues, big market swings, and even how confident consumers are feeling in different corners of the globe. Our goal here is simple. Pull out the key insights, the really important stuff, so you walk away feeling like you've truly got a handle on these global economic shifts.
Exactly. And it's not just about the individual pieces. We want to show you how surprisingly interconnected these things are. There are definitely some aha moments waiting in this data.
Okay, let's get started then. The thing that immediately jumped out at me, honestly, was a pretty startling number. The United States just posted its highest ever monthly tariff revenue last month.
Highest ever. That's quite a headline.
It really is. And just quickly for everyone listening, when we talk tariffs, these are essentially taxes slapped on imported goods. It's a tool governments use to influence trade.
A very direct tool.
Right. So the specifics here, according to the Treasury Department, June tariff collections hit a record $27.2 billion. Now, when you dig into that, $27.2 billion, that's nearly 4 times higher than June last year.
4 times. It's not a small increase.
Not at all. And look at the impact on federal revenue overall. Tariffs are now making up around 5% of total federal tax revenue, which, get this, has doubled from about 2% in just 4 months.
Doubled in 4 months. That's incredibly fast.
It is. And because of this revenue surge, plus government spending actually dropped 7%, the U.S. managed a budget surplus in June, $27 billion. Oh, and one more thing, the U.S. dollar, which had been kind of weak, actually reversed course and started strengthening.
Okay, so that's a lot happening at once. The revenue jump, the surplus, the dollar turn.
Exactly. And some analysts are starting to suggest that maybe the market sees President Trump's, let's say, aggressive trade policies as actually working, as a success.
Well, what's fascinating there isn't just the sheer amount of money, the $27 billion. It's the speed of the shift, like you said. Doubling the tariff contribution to federal revenue in only 4 months. That's a really dramatic change in the government's income streams.
Mm-hmm.
And the dollar bouncing back so sharply, especially after it had been declining, that signals, a pretty significant rethink happening in the market. It kind of suggests investors might be focusing much more on these immediate, tangible results, maybe even short-term profitability, even if the policies seem disruptive at first.
Right. That perception shift is key.
It really is. This quick pivot in how the market sees things is, I think, a critical takeaway here.
It's definitely compelling that some analysts are framing it as a policy success because the financial impact looks so immediate and positive. But, economic data always has multiple angles. Are sources mentioning any counterpoints? Maybe some analysts pointing to longer-term risks or different interpretations that this big revenue number might be overshadowing?
That's a really important question to ask. The headline numbers look strong, very robust. But if we dig deeper, concerns about, say, long-term supply chain problems or maybe rising costs for certain industries down the line, things that could eventually hit consumers. For now, though, it seems like the immediate financial data, that big tariff number and the surplus, is really driving the conversation and the market sentiment. It just highlights how quickly money follows, demonstrated short-term gains. It's a fascinating look at economic priorities, really.
That's a great way to put it, the immediate versus the long-term view. Okay,
Yes.
so keeping that context in mind. What about elsewhere? Is this just a U.S. story, or are we seeing ripples globally? Let's maybe pivot over to Korea. They're a major player in global trade, obviously. Their markets are telling a really interesting story right now. It might give us a useful comparison or maybe something completely different.
Yeah, Korea is definitely worth looking at.
So the markets there have been, buzzing. The main index, the KOSPI, it recently broke above 3,200 during trading hours. That's the first time it's done that in 46 months, so almost 4 years.
It's a significant milestone.
And it's not just the big guys. The KOSDQ index, that one also jumped past the 800 mark. Apparently, this is being driven by policy momentum and pretty strong investor feelings, even with all the uncertainty out there globally, what hitting those specific numbers means.
Breaking 3,200 isn't just a number, it's a big psychological barrier. It signals real confidence coming back, especially among the big institutional investors after quite a while.
Okay.
Picture of pretty broad-based positive sentiment returning, bullishness.
Right. But connecting this back, even with these big gains, our sources throw in a note of caution, don't they? Some analysts are apparently warning about a possible correction, maybe this week even, July 14th to 18th. Investors looking to, cash in their winnings. What's behind that caution when things seem so positive?
Well, it's pretty classic market behavior, really. After such a strong run-up, it's natural for some investors to decide, okay, time to lock in some profits.
Yeah,
It doesn't necessarily mean the underlying fundamentals have changed. It's more like a healthy pause or rebalancing.
makes sense.
But yeah, it's not all caution. The sources also highlight continued optimism. Things like shareholder return policies, especially in holding companies and finance, and still a lot of interest in specific sectors like shipbuilding, defense, nuclear power. Those are still seen as strong drivers.
Okay.
And here's a key link back to our earlier discussion. Removing those tariff uncertainties with the U.S., that's seen as potentially critical for pushing the KOSPI even higher. It really shows how that global trade picture casts a long shadow or maybe a bright light on these individual markets.
It really does. Fascinating connection. So we've got these market highs in Korea, maybe with a little sight of caution about valuations. But where else is this optimism showing up? Maybe away from the trading screens. The sources point to the retail sector, which sounds like it's really humming along.
Yeah, that's another bright spot they highlight.
And it seems pretty significant. Business sentiment among Korean retail and distribution companies, it's apparently hit its highest level in 4 years.
4 years, wow.
Yeah. There's this index, the Retail Business Survey Index, the RBSI. For the third quarter, it surged to 102. Now, that's way up from 75 just the quarter before. And crucially, it's the first time it's gone above 100 since the third quarter of 2021.
And 100 is the key baseline, right?
Yeah.
Above 100 means more businesses are optimistic than pessimistic.
Exactly. So crossing that line after almost 2 years is a big deal. And it seems it's not just hope. It's fueled by concrete things. The new government's talking about a consumer coupon program. It's the summer vacation season. And, of course, those stock market gains we just discussed. Plus, here's a telling detail. More than half the companies think the new administration will actually have a positive impact on their business. So what does this big jump in retail feeling tell us about broader economic confidence in Korea?
Well, this is a really neat example of how different factors can feed into each other, creating positive momentum. When retailers feel this good, it's often a strong indicator of underlying consumer confidence. They're expecting people to spend at a consumer coupon program. That's designed precisely to encourage spending and boost that confidence. The fact that the RBSI broke through that 100 mark again, it clearly shows businesses are anticipating more demand. They're likely feeling more willing to invest, to hire. It draws a really direct line from government policy to market performance, and then right down to how businesses on the ground are feeling about the future. Tangible optimism.
It really is striking how these different threads seem to connect. You've got this dramatic surge in U.S. tariff money and the dollar changing direction. Then you shift over to Korea, see their markets hitting these significant highs, and then you find this really palpable optimism bubbling up in their retail sector. It paints a very dynamic picture.
Absolutely. It's all interconnected. Consider this final thought. Our sources really lay bare how government actions, whether it's clicking tariffs in the U.S., which unacceptably boosts the budget, or rolling out consumer coupons in Korea, which lifts retailer spirits, how these things can send immediate ripples through the markets. And not just the market, but how businesses and investors perceive stability and the potential for growth. It just underscores that global economic health isn't one single thing. It's this complex web, decisions and reactions bouncing off each other, often with surprising immediate consequences that can really shift the whole narrative almost overnight.
We hope this was a useful shortcut to getting informed.
Something to think about.